Today we're talking about rebuilding higher education finance, reform through reconciliation. I'm thrilled to be able to host this conversation with some friends who also happen to be exceptional experts in this policy realm. I think that we are in a moment that is extremely exciting in terms of the opportunity that is in front of us to rebuild what I would describe as really a broken system of higher education reform.
Budget reconciliation is a process created by the Congressional Budget Act of 1974. And the key aspect of this legislation is that it allows for expedited consideration of certain types of legislation. That legislation has to involve either tax, spending, or debt limit as a part of that process. And the key advantage of this act from 1974 is that it allows for a law to go through the Senate a lot more quickly. And so this process is not subject to the filibuster.
Now, the Republicans advanced last year a bill called the College Cost Reduction Act, which is a very sweeping reauthorization of the Higher Education Act, which touched lots of different areas of higher ed reform. So I would imagine that that's probably going to be the baseline that they're going to work off of in this reconciliation bill. Now, they can't do everything that was in that bill because, as Alex said, you can't just put anything into a reconciliation package. What you put into a reconciliation package has to directly affect, revenues or expenditures of the federal government, tax and spending bills. You can't have incidental, unrelated policy changes.
We would love to see PLUS loans tackled outright. We know that PLUS in particular has been incredibly inflationary on the price of college. You and Preston have done great work looking at that. Preston's done great work looking at the negative ROI of so many, I think it's 40%, Preston found, of master's degrees. And the PLUS loan program really is responsible for a lot of the borrowing that has not served students well in the long run. I have said for a long time, higher ed has a PR problem, but it's much more than a PR problem. I think at this point, there is a needed cultural course correction that higher education has to undergo, and I think is actually undergoing, thanks in large part to the efforts of the Trump administration over the past 2 months.
Someone start me off with, where you think we're heading and where you think we should be heading when it comes to reform of accountability for colleges.
It's a great question. So I really think the philosophy behind risk sharing is that, all three parties to this transaction should have a share in the risk. So right now, the student takes a risk by taking out a loan because if you default on your loan, bad things can happen to you. You can see your credit score impacted. The taxpayer takes a risk because if students don't pay back their loans, taxpayers lose money. We have to cover those costs. But right now, the school is not really taking a risk when a student loan is made, and the schools can really benefit from the student loan program by being able to take the money, use that for their own revenues, for their own purposes. I think one aspect of all this that the narrative hasn't really picked up on yet is that Republicans are really trying to go after a lot of the very predatory aspects of the federal student loan program. So, trying to eliminate Parent Plus loans, which have currently a 9% interest rate and often pushed on low-income families who really can't afford the debt to pay for, wildly expensive degrees that just cost way too much.
The big one that was hanging out there that Preston stole was accreditation reform. This has been a conservative priority for decades now, and really the priority from my vantage point has been to fully decouple federal financing from accreditation, to decouple Title IV from accreditation, to Preston gave the example of allowing states to potentially choose who can credential individual courses and courses of study.
I would encourage some colleges to potentially see this as an opportunity. We know from polls of college students that the number one reason students go to college is because they want to get a job and they want to increase their earnings. They think other things are important too, but the financial considerations are really top of mind. And I think the reason that we're seeing a lot of loss of confidence in higher education, the reason that we've seen college enrollment drop over the last 15 years is because students do not feel like that it's a guarantee that if they go to college, they're actually going to get that good job.
I think statutory certainty would go a long way to not just helping college and universities, but everybody else that is tied some way to the higher education sector. So for those 40 plus million student loan borrowers out there, that don't know what income-driven repayment plans they have access to. I think if this process leads to some statutory certainty about loan forgiveness, about their monthly payments, that would go a long, long way to ensuring that the whole system is on solid footing, because we've seen a lot of regulatory whiplash. And so making sure that student loan servicers have what they need to deliver that high quality service that borrowers should expect, I think is absolutely essential in the months ahead.